Hey traders, JW here. Before we get started, I want you to read the risk disclaimer. Just understand that this video is just for educational purposes only. I've been given the challenge of seeing if I can trade up this blown up account from $11, and we started just 2 weeks ago. We're into the third week, and from $11 we are now at 302. So yesterday when I was on, I looked at some trades. Don't forget to read this. Turn it off. And one of the trades that I was looking at was gold. We got into that, and that's been very successful. We lost a little. We had a crack at the CAD JPY, and you can see how it didn't really get going. Lost about 20 pips in here, and we're just sitting under this resistance now. One of the keys of success in trading is obviously to keep your losses smaller than your wins. And so let's just go over what we do here in Winning Ways at Trading Zone. We don't trade with money you can't afford to lose. We don't chase the market. We actually protect your capital. So that means that before you even trade, you need to decide how much you're prepared to lose if the trade goes sideways. You need to find a strategy that works for you. There's a lot of good strategies out there, but you need to be aware that the market conditions are changing all the time. And in terms of strategy here at Winning Ways, we do not rely on crowns, shoulders, pennants, and all that sort of stuff. We find some indicators that can help us get an entry and help us to get a close, and we use trade and support. We use support and resistance as the basis of any strategy that we begin to adapt. The other thing that I want to say is it's absolutely useless you copying trades, because you have a different risk tolerance than anybody else. You have a different trader psyche. What you have to do is do the work, and you've got to discover what works. And we'll give you little clues along the way. But the idea of these videos is that you can see how it really is. We're not trying to sell you anything here. If a trade is successful, I believe in passing it on. So I'm just sharing my own experiences. I have my own personal trading account. I do make a living out of that, but these videos are centered around the rescue of the $11 account. So let's get into it and close that off. So we talked about the CAD JPY being a loss, and the only trade that I'm sitting in at the moment is the Euro CAD. So let's just go have a quick look at that. You can see that this was a resistance area where this yellow line is, and yesterday I got triggered. I had a pending order in above the close of this candle, and if we just squeeze that up a bit, you can see the close of that candle. This day it had bounced off the resistance, and I didn't spot it early enough. I should have actually had the pending order where the stop loss is. So here we're sitting at around about $1 down at the moment. We've got a 20-cent lot size for this account, bearing in mind that if this goes pear-shaped, we're going to lose, wait for it, drum roll please, about 50 pips. So that is going to be about $10, and I'm happy to risk $10 on this trade. I think it's good. I can see a crown or head and shoulder formation in here. It's broken a key area of resistance. It's had a little pullback yesterday, and we'll see if this gets going. My take profit target is going to be probably looking up in here somewhere, maybe as high as that. It's above my baseline, which is all good. We've got the cross, both of this indicator here. We've got the up arrow, and here's the trigger. Once it's crossed, we're all good to go once it breaks the resistance. So we'll keep an eye on that. Let's have a look at gold, and then we'll just talk about the next few days on the market. So you see yesterday that gold actually had a little bounce with the weakening of the US dollar. It just weakened a little bit for the day. It doesn't mean to say that it's going to continue to be weak. It's just having a rest. Now, this is the key area of resistance right now. We're looking around the 1670. Now, this could go sideways for days, and I'm not trading it unless I get a break above here, or unless I get a really good candle formation on maybe the 4-hour or the hourly. Now we can see here that there's nothing to get too excited about. This was the big trade that we took on Friday, and took this little one at the beginning of the market open yesterday. So there you have it. There's nothing more to do. Silver, I'm watching, we got this little bit of trade because it broke this resistance area. Now it's just playing around, and you can see that it looks like it is just going to go sideways. So I have alarms set. I want to see if there's any action. New Zealand USD, there's not a lot there. We know that we're in a downtrend. And if I put my half trend stuff in there, nothing's really changed. So if we go back to basics, let's give you a couple of things that can help you if you do the work. There's the basics now. We're looking at the daily time frame. Let's just squish this up for a bit for you. Might even squish it up a bit more. And you can see that we have been in a strong downtrend. One of the things we do at Winning Waves is we like to know the trend direction, and we try to cooperate with that. We're not against trading pullbacks, but you need to be really careful. And I suggest to you, if you're just beginning in your trading career, to stick to the trend. So what that means in a situation like this, you can see that this was a key area of resistance or support where price had reacted before. Here's the next one, and you can see that we are down in here, and this is the trade that we wanted, which we got. Now we're just waiting. If you try to trade in here, this is where you're going to get beaten up. It's as simple as that. You can sit in front of your charts and try and make money out of that if you like, but I will rather wait for a bounce back up here or a retest or something. If this is a 4-hour chart, and you could change your color, and you could, if you wanted to, let's for 4-hour do a blue, for instance, and you can keep a closer eye on it. And if it breaks out of this range on the 4-hour chart, you could be worth maybe a trade back there. But for me, I'm not touching it because of what I see on the economic calendar. Now let's just go to the economic calendar. Alrighty, we're in on Tuesday now in the Southern Hemisphere. You can see we've got monetary policy meeting coming up for the Aussie later this afternoon. Not sure what that will do to the market, but here's the real stuff that I'm interested, which is a couple of days away. We have the Federal Bank statement coming out, and the federal fund rates are suggesting quite a big rise. So this will cause a bit of volatility in the market, and the press conference will be worth listening to. That's Thursday morning our time, and we will be watching that closely. Then we have the monetary policy statement for JPY and Bank of Japan press conference. Now, I'd just keep an eye on that. Wouldn't be too excited around that. Swissy doesn't seem to move much unless they make a huge unexpected announcement. But the pound, I'm really interested in. It looks as if they're wanting to hike this up 50 basis points, and that will have an effect on the pound. Great Britain's got quite a high inflation rate. It's running at 10%, so that has a huge effect on the market. We've got a whole lot of euro news, but it's particularly the pound and the US dollar. So with that being said, I'm not expecting to catch too much action until the Fed rate comes out. And you can see with my strength indicator that these currencies, all these currencies are flattening out, and I'm just going to sit on the sidelines now. I've made good gains on this account. I'm not going to chase the market, and I'm going to be patient. So with that being said, I would encourage you to use the time to actually do back testing or forward testing, test out indicators. It's a great opportunity over the next couple of days to do a lot of background work. To be successful as a trader consistently, you do have to put the work in. So with that being said, then I wish you well. Look after your account. Don't chase the market. Protect your capital. And we'll probably see you around the announcement that is coming out from the Federal Bank of America. Cheers.